Welcome to the third AFC Country and Stakeholder Symposium. I'm Mark Edo, and I'll be your guide for the next hour and a half, where we will hear from some great speakers who will give us insight on the power of partnering with AFC to reduce infrastructure deficits, develop natural resources, and catalyze sustainable industrialization. We have simultaneous interpretation in English, French, Arabic, and Portuguese. It's easy to use. Just simply click on the interpretation tab at the bottom right of the screen and choose your desired language. Please speak a little slower than you usually do so you can help the interpreters interpret. Now, we have a packed schedule, so I'm going to have to be a little strict on timekeeping so we can fit everything in. This is an interactive hour and a half, so I urge you to participate by adding your thoughts in the chat box, and most importantly, your questions in the Q&A box. Please indicate who you are and who you're directing your questions to. Now, we're coming into the second quarter of 2023, and this year promises to be the year of AFC impact, a year where we deepen and reinforce AFC's partnerships and cooperation with various stakeholders. That's why the theme of this year's symposium is Partnering for Resilience and Sustainable Growth in Turbulent Times. The meeting will focus on partnering to implement bold solutions that support African states to deliver on their development priorities in these uncertain times that are beset by intersecting global crisis. Now, as African governments, as central banks, as corporate leaders, as investors, we need to come together and be bolder in our ambitions. We need to support our continental champions and institutions like AFC. Those were not my words. Those were the powerful rallying cry echoed from our first speaker when he last visited us on the stage at AFC Live in Abuja. It gives me great pleasure again to welcome the chairman of AFC's board of directors and the deputy governor of the Central Bank of Nigeria, Dr. Kingsley Obiora.
Distinguished ladies and gentlemen, I warmly welcome you to the third edition of the Country and Stakeholder Symposium. I especially wish to acknowledge the presence and participation of the President of Zambia, His Excellency Hakainde Hichilema, various heads of government and honorable ministers represented, heads of central banks and other agencies, and state-owned enterprises, our development partners, our esteemed guest speakers, and every participant present today. As most of you are aware, this symposium was inaugurated in 2021 as a platform for the AFC to engage constructively on how the corporation can support various governments to navigate the uncertain waters caused by the COVID-19 pandemic. We have successfully hosted the symposium each year and achieved several milestones, which will be highlighted in the course of the program. A key success is the number of countries that have joined our cooperation. Today, I am pleased to announce that the AFC now has 40 member states, meaning that 75% of all African countries have acceded to the AFC Establishment Agreement, which allows the corporation to operate within a de-risked framework in their countries. With this membership, AFC can mobilize significant levels of short, medium, and long-term liquidity and project financing requirements. This is a significant milestone for a young organization and a testament to our unique business model. I extend my gratitude to all our members and acknowledge the commitment and support of all our existing and prospective shareholders and other stakeholders who have contributed significantly to the success we are celebrating today. AFC is one of the most successful public-private partnerships on the continent, delivering significant value based on this network of partnerships. The theme of this year's Country and Stakeholder Symposium, Partnering for Resilience and Sustainable Growth in Turbulent Times, is both timely and pertinent. With the global crisis, post-COVID-19 pandemic tailwinds, the Ukraine war, liquidity constraints, climate change, global inflation, high interest rates, food and security crisis, amongst other issues that is facing the globe today. The time to partner and explore solutions to address these crises sustainably and deliberately is heightened. There must be a shift from the current status quo of traditional investments or aid to innovative and pragmatic investments in instrumental infrastructure and industrial solutions, which will be catalytical in addressing the continent's most pressing development needs in trade, energy transition, and food security. The continent must realize that building sustainable and resilient infrastructure and industrialization is no longer a choice, but a survival requirement to secure our future by unlocking our untapped potential in energy and battery minerals to enhance productivity, create jobs, and consequently improve lives. This is the mission of the AFC. In closing, I call on all African governments to support institutions like the AFC that provide African-tailored solutions to solve the continent's most pressing challenges. I hope this symposium will inspire you to action and that you will continue supporting the AFC as your preferred development partner on the continent in providing new and innovative financing solutions to navigate our current economic challenges. I hope that stronger bilateral ties with stakeholder countries will be formed, that new partnerships will be established, and that older ones will be scaled up. Once again, I thank you for joining the symposium, and I wish you all successful deliberations.
Thank you to our chairman, Dr. Kingsley Obiora, for his very warm welcome address that gets us going. Now, the number of AFC member countries is growing, and it's easy to see why. The uncertainty of this changing world means that now, more than ever, Africa Finance Corporation can serve as a trusted partner to African nations looking to build back, or rather forward, better as they seek to keep growth on track. The following film highlights some of the great benefits of being a member or a shareholder of AFC. Please roll the video.
The African Finance Corporation, was established with a clear mandate to address Africa's infrastructure deficit and challenging operating environment by developing and financing infrastructure, natural resource and industrial assets that will improve productivity and enhance economic growth of African states.
From day one, we had the privilege of having a public and a private sector combination. And the reason was it allowed public sector support to be combined with private sector rigor, and that allowed a great cross-pollination of ideas, priorities, experiences, networks, so that the institution could benefit from a wider stakeholder support.
AFC was created by a treaty among African states, and from that particular point, it positioned AFC to be a preferred partner in supporting and assisting African governments in developing their infrastructure across the continent. However, what makes it different from other interactions is the fact when it comes to the shareholding with the corporation, African governments recognize the need to actually have private sector participation that will bring efficiency, innovation, in particular sector knowledge that will ensure sustainability of the investment that will be done across the continent.
PIC is one of the largest asset managers in the continent. We invest across a number of asset classes. Infrastructure is one of those. Our exposure to infrastructure in the continent is growing. As a result, when we assessed a number of players, AFC became one of the leading infrastructure players in investing in infrastructure within the continent.
AFC shares the same vision and has been economically active in Egypt, with a key focus on working with local private and public sponsors, while also delivering transformational track record across the continent. We have also witnessed the corporation's ability to quickly mobilize on key infrastructure and industrial projects of national importance.
Importance of a partnership between us and international financial institutions is the recent approval of the Green Climate Fund of $240 million equity investment in our Infrastructure Climate Resilient Fund, which is a fund that seeks to incorporate climate risk in physical infrastructure build. And that is a way of us trying to ensure that the infrastructure that we build on the continent, can withstand the impact of climate change.
AFC has already identified immediate projects pipeline worth over $1 billion in critical infrastructure across key sectors in Egypt, including renewables, energy, natural gas, and heavy industries.
The work we've done in developing to de-risk opportunities across the continent, got us an award recently. We were awarded DFI of the Year 2022 for Europe and Africa, which is significant because all the other DFIs are operating in Europe and Africa, and for us to get that award, demonstrates what we do and how well we've been doing that.
For our charter, we will always make sure that the public-private partnership continues, and we will also make sure that we bring in as wide a diversity of our shareholder base, diversity in terms of other forms of private sector capital that's available on the continent, and also diversity in terms of bringing in on a selective basis key non-African shareholders that come from regions and countries that have a huge strategic relevance for Africa. And therefore, a partnership can be created as opposed to just a pure financial relationship.
Our job is to find ways to accelerate development impact. And we come to that with a conviction that we have a critical role to play in the development of our continent.
AFC's investment is one of the best investments we have in our portfolio today. We are proud to be the second largest shareholders of AFC after the Central Bank of Nigeria. And the dividend is good, the future is good, and we bet on AFC at any point in time.
Some powerful sentiments there. Now, at a time of unprecedented global challenges, Africa's solutions have never been more critical or more valuable. AFC's CEO has often been so eloquent in articulating what African states need to do to seize this moment, to industrialize and to prosper. AFC is impacting Africa's development and resilience positively, and it comes to it with a commercial mindset. So it gives me great pleasure to welcome the remarks from AFC's President and CEO, Mr. Samaila Zubairu.
Good morning. Welcome to AFC's Third Country Symposium and Seminar. I would like to specifically welcome His Excellency President Hichilema Hakainde, the President of the Republic of Zambia, all AFC member states, shareholders and board members, heads of governments and honorable ministers, heads of central banks, government agencies, and state-owned enterprises, development partners, esteemed guest speakers, all participants present. So this symposium was conceived 3 years ago as an AFC convened forum with several objectives, such as building partnerships with key stakeholders in our shared objective of bringing about Africa's development, demonstrating what has worked in AFC's 16 years of driving infrastructure investment on the continent. And we have several examples to give on that. We have built several critical infrastructure across the continent. We have built several ecosystem economic zones. We have built several projects that all Africans can benefit from, and all African states can learn something from that. We want to share best practices in development of transformative infrastructure projects so countries can benefit from each other's and AFC's experience. We want to provide a platform to discuss the key issues that matter to our continent in the midst of current geopolitical stress and uncertainty, rising interest rates, inflation, and limited access to much needed financing for African economies. We believe that this year's theme, which is Partnering for Resilience and Sustainable Growth in Turbulent Times, is quite apt. Why? Because we are facing a number of challenges, most of which require intentional approach to providing the solutions to overcome this crisis. We right now have a number of challenges facing the globe, most of which are around resources and the scarcity of resources. Fortunately for us in Africa, we have quite a bit of these resources. So it is very important that we take decisions that will allow us have better value, we capture more value and retain more value on our continent. Africa is energy poor. We have over 600 million people without access to electricity. The Russia-Ukraine war has exacerbated food crisis on the continent. We're highly vulnerable to the impacts of climate change. More than a third of our countries or our continent's youth population are unemployed. Africa is key to the energy transition, and we must ensure it works for Africa. Our continent is blessed with the key minerals which will drive the energy transition. It is essential that we maximize this by ensuring that we capture and retain value of these minerals and metals on the continent. We have to move away from exporting a lot of these minerals and metals as raw materials, only to be processed outside the continent with the jobs that are associated with processing those minerals and metals outside the continent. I've said this before, the market or opportunity for electric vehicles is $7 trillion between now and 2030. It's going to go to $46 trillion. Africa has to have a significant share of that. We read about countries or companies owning most of the minerals and metals, especially lithium, in certain African countries. We have to change that. We can't allow people own all the minerals and metals that are critical for the energy transition. And then we being used as a ground to harvest raw materials. We must take decisions now that we will process those minerals and metals in our continent. That is how we create jobs for our people. That is how we will ensure that this future potential of Africa is truly realized in our time. Business as usual cannot and must not be allowed to continue. We must do all it takes to mobilize the capital that we need. And we have some of that capital on the continent. We don't have all of it here, but we have some. We must demonstrate with what we have that we're able to develop our continent and we're able to create jobs for our people on our continent. I would stop here and I'll let us go and dive deep into these conversations. Thank you for your time. Thank you for your attention.
Thank you very much, Samaila. Now, last month, I understand that you led a delegation to Lusaka, where you met the president of Zambia, and it really was a meeting of minds. You agreed that the key to tackling the challenges that we face as a continent is collaboration, and that ultimately the most effective solutions are to be found within our borders, which is what you've just articulated in your speech there. Here in Africa is where the solutions will be found. As His Excellency President Hichilema said then, every step we take counts. It therefore gives me great pleasure to welcome these words from His Excellency, the President of the Republic of Zambia, Hakainde Hichilema.
Distinguished ladies and gentlemen, thank you very much for inviting us to the third edition of the Country and Stakeholder Symposium of the Africa Finance Corporation, AFC. It is a great pleasure to join you here today representing the Republic of Zambia, a member country and long-standing partner of the AFC. This is an opportune time to rethink, repurpose our approach to solving the greatest development challenges of our time, from climate change to food insecurity, energy and debt crisis. Africa is on the brink of its worst economic and humanitarian calamity in decades. To overcome this, we must challenge ourselves to put our continent first through collaborative and innovative actions to emerge better from the crisis and be able to even exceed the expectations of the future generations. We congratulate the board of the directors and management of the AFC for your exemplary work, dedication, and indeed commitment to preserving and promoting the cooperation as one of the leading multilateral financial institutions on our continent. Through your pioneering project development and ecosystem investment strategies, you have played a major role in de-risking resilient infrastructure projects across the continent and providing the basis for industrial growth and greater developmental impact. Zambia is indeed very proud to be part of the membership of the AFC. This is a clear demonstration that through partnership and cooperation between African sovereigns and African multilateral institutions, we can forge a formidable force to achieve our developmental goals. In Zambia, AFC has invested approximately US $200 million in infrastructure across the power sector, heavy industry, and transport since the country became a member. We are currently in discussions with the management of the AFC on a number of areas of collaboration to position Zambia as a strong hub for manufacturing and production by harnessing natural resources for value addition. Additionally, we aim to collaborate with the AFC to review our corporate value addition opportunities to support our renewed focus on local participation and in-country value addition. Extremely important. Finally, Africa must and will find ways to stop the continuous exploitation of its formidable natural resources and human resources alike. It must become the manufacturing hub for the world and reduce the unnecessary shipping with its associated carbon footprint. AFC is the ideal partner to enable value addition and local processing at source that will enhance export earnings, create jobs, and sustain infrastructure and energy projects commercially in our continent. The Country and Stakeholder Symposium is a unique opportunity and a clarion call for African governments, along with other private sector stakeholders, to come together to find collective solutions and sustainable means of moving the African continent forward. It is time for Africa to play a strategic role on the global landscape and be seen as a solution to critical global headwinds, including food crisis, energy transition, and indeed other areas. We must invest African capital in Africa to bring solutions that work for Africa while also benefiting from the global capabilities. We wish AFC a successful symposium and pledge the support of Zambia as the cooperation spearheads and charts the course for bold solutions. I thank you for your kind attention.
His Excellency, the President of the Republic of Zambia there, Hakainde Hichilema. Well, if I were to sum up what he said the time is now. Now we move on to the part where we explore how to craft those solutions together and what it takes to do that. I mentioned that AFC membership is growing fast, and this year the corporation welcomed its 40th member state, Ethiopia. The inclusion of Africa's second most populous country means that 75%, 3/4 of African countries now count themselves among the AFC fraternity. It therefore gives me great pleasure to welcome His Excellency Dr. Eyob Tekalin Tolina, Ethiopia's State Minister of Finance, to say a few words before we take a deep dive into what it takes to mobilize that much needed capital in these tough times. Dr. Tolina has spent close to 20 years helping shape Ethiopia's economic and social development in various roles in public and private sectors. He's worked for UNECA, COMESA, UNCTAD, IFC, and the World Bank, and many more organizations. And he's here with us now. Dr. Tolina, the floor is yours.
Thank you so much, Mr. Chair. It's such a great honor for me to address you in the third edition of the AFC Country and the Stakeholder Symposium. In the interest of time, all protocol observed. I see a lot of dignitaries here. Very warm welcome from Addis. It's quite interesting as the team of this panel is talking about innovative solution, finding a trusted partner, mobilizing resources from the continent and beyond to advance the development agenda that countries in Africa, Ethiopia included, have advanced on. For me, it was really great to hear the impact that AFC is having on the continent along the lines I've mentioned, in playing a very catalytic role in mobilizing capital and making sure that capital is invested in broader development projects, from energy to infrastructure and whatnot. So it's with great honor that I speak today at the symposium and announce that Ethiopia is pleased to join AFC as the 14th country member and join this august institution in advancing its agenda. For us, it's a great milestone because we are at a very critical stage in our development efforts. As you know, Ethiopia has grown sustainably for double digits for over a decade now. Over the last 3-4 years, we've seen significant challenges that are caused because of external pressure, challenges that are caused because of internal conflict. But what that challenge essentially has shown Africa and the world at large is that there are economies like Ethiopia that are resilient. There are countries like Ethiopia that can withstand shocks that come in twos, in threes, in fours, in five, and stand tall and talk about the next phase of development aspirations. As we speak today, we are about to launch what we called the second, the 2.0, Ethiopia's homegrown economic reform agenda that took us through those difficult years. We had 1.0, the first version of the reform, but we are about to launch the second version. And in fact, AFC came in at the right time when we were talking about the next phase of our growth plan. Now, what I think makes AFC unique is that AFC has a very good track record that bodes well for us, as demonstrated by the AFC's engagement with Ethiopian Airlines previously, and its wider investment plan in power, in renewable energy, in logistics, in telecommunication and mining. I understand already AFC at the get-go had identified pipelines that is worth about 300 million in those sectors. Mr. Chair, for us, we see AFC as a Pan-African financial institution. We see AFC as an African institution that is working for African solutions for African problems. So in that sense, we're very pleased to announce our membership today and look forward to working with you and to see how AFC can prove itself in playing a very important critical role in taking Ethiopia to its next phase of growth. We have ambitious growth plans. In the next 10 years, we would like to see Ethiopia become a middle-income country. We have identified critical investment projects across different sectors. So I'm really looking forward to have deeper conversation with the panel and with you on how we can realize this. Before I conclude, I really want to wish everyone a very successful event, and please be assured that Ethiopia plays to work closely with the AFC and with the broader membership as the cooperation drives sustainable and instrumental infrastructure for the continent. I thank you.
And we thank you, Dr. Tolina, Ethiopia's State Minister of Finance. Welcome to AFC. Now let's dive straight into our panel. The theme of the discussion is unlocking and mobilizing capital in an era of intersecting crisis. It'll last for about 45 minutes, and there will be opportunities to take a couple of your questions. So please start to type them into the Q&A box or make your comments in the chat box. Get them in early, and there's a better chance that I'll be able to pass them on to the moderator for him to pass them on to the panelists. Well, who are the panelists? We have an excellent lineup of speakers. They are Mr. Banji Fehintola, who is the Senior Director and Head of Treasury and Financial Institutions at AFC. Ms. Rania El-Sawi is the Deputy General Manager of the Market Sector at the Central Bank of Egypt. And Mr. Olukayode Piton is the Managing Director and CEO of the Bank of Industry in Nigeria. You're all most welcome. We also have an excellent moderator in the guise of the Executive Director and Head of Financial Services for AFC, Sanjeev Gupta. Sanjeev, it's all yours.
Thank you, Mark, and good morning from Lagos to everybody. Needless to say, an absolute pleasure and privilege to be speaking to you this morning. Mark, you know, when I was thinking of how to kickstart the conversation, obviously the one thing that hit me was this is the third time around that we are doing this symposium. And this symposium and the genesis of this symposium was in the depths of despair when COVID hit the world. That's when we created this concept of a virtual platform to be able to share ideas, collaborate with our member states, and find common solutions. And it's remarkable, isn't it? It's so remarkable that 3 years down the line, we are still looking back at a period, and we are probably looking at a future which is still so uncertain. It's still so volatile, still so complex. You know, the last 12 months alone makes you think hard, because just when COVID was disappearing and we thought we saw the light, as they call it, at the end of the tunnel, we were hit with inflation, hit with liquidity constraints, hit with trade wars, geopolitical challenges, cost of money went through the roof, you name it. Unprecedented, complex times. Times that we could have done without, if that's one way of putting it, but times that again underlined the sheer resilience and stamina of the continent to surmount these odds. I was particularly intrigued when I heard the Minister of Finance of Ethiopia speaking, where he used these words, resilience. And that's so phenomenal, isn't it? Because there is a saying, as they say, that when the going gets tough, the tough gets going. And I don't think there is anybody tougher than some of us on this continent, me personally excluded, of course, in that list of tough people. So, you know, just to set the stage, Mark, for the conversation, I'll just quickly quote from a book called The Tale of Two Cities, written by Charles Dickens, long time back. And it's almost uncanny what he said in those days. He said that it was the worst of times, but it was also the best of times. It was the age of foolishness, but it was also an age of wisdom. It was an age of despair, but it was also a time of intense light. And I think that is what the continent is all about today. So let me therefore move to my panelists and try and have a conversation which will hopefully leave the audience with a very, very simple conclusion. And the conclusion is that on the continent, we find solutions collectively because we know a thing or two about managing adversity, because that's what we do for a living. So let me come to you, Dr. Opitan from the BOI, because Mr. Opitan, you actually spearheaded probably one of the most interesting transactions on the African continent last year, which was designed to manage the problems that we all faced, which was around cost of money, liquidity constraints, and general risk perceptions having gone up so much more on the continent. And there you are, you managed to raise successfully a huge amount of money from global markets out of Nigeria, running the institution that you do from Nigeria. Tell the audience a little bit about the transaction and what it taught you.
Okay, thank you very much, Gupta. And thank you, AFC, for inviting me. Like you said, these are very interesting times. A lot of things have happened, and the financial landscape of Africa has changed. For those who are not familiar with Bank of Industry, we are a state-owned enterprise. We're a government-owned bank, but we're a government-owned bank for the private sector. So even though the shareholders, Central Bank of Nigeria, Ministry of Finance Incorporated, but we don't lend to government. No, all our businesses are done with the private sector. But then, like you said, last year was a very tough year. When you look at the markets, you look at the yields, you look at the type of returns the investors were asking for, it became a tough year. Nigeria's rating was downgraded, by Fitch to B-. Outlook stable. Moody's was more aggressive. The downgrade was a C AAA1. With those kind of rating, to raise money will have been very difficult. We are a bank that is well run. In terms of our rating locally, we are AAA. But then the way ratings are done is that you cannot have a better rating than your country when you even look at the ownership of Bank of Industry. So if we were to go to the market to raise money, it means we'll have to go to the market with the rating of Nigeria, and our cost will have been prohibitive, definitely double digits, possibly in the maybe 14-15%. So what did we do? We said to ourselves, this is a bank that is well run with good corporate governance. Is there a way we can look for partners in Africa that we can do a wraparound with? And basically we narrowed down to 2 banks in Africa, and AFC was one of those banks. One, they are centered on Africa. Number 2, they have good rating. AFC has an A3 rating. So we got into a discussion with AFC, and we must commend AFC. They were very quick, they were very fast, they were very professional. We were able to come to an understanding that they will give a wrap, which means we're going to go to the market, but guaranteed by AFC. So that took us out, technically, out of the constraint of the rating of Nigeria to the A3 rating of AFC. And then we had a roadshow, in the Middle East to increase, at least the sectors and that we're talking to. Initially, you go to London, you go to New York, but now you're also looking at the pool of funds in the Middle East. And so that was what we did. We went to the market with a wrap of AFC to raise money August of last year. It was very successful. We raised over €1 billion, and the pricing was very good. It's not at a pricing that even the country Nigeria could not raise money. We were able to get about 3 months LIBOR. It's not a secret now, with about 1.65. So that's what we did. So it's an option that's available to other SOEs that are well run, well managed. They can package themselves and find a way to move away from the constraint of the national rating of their country. So that's one of the deals we did, which won some awards here and there.
Mr. Opitan, thank you so much, because you had highlighted a couple of key aspects. One is seizing the opportunity that you saw, but clearly having that innovative set of thinking in your mind to be able to find a solution when nothing obvious existed, right? And I think the solution you finally got was a phenomenal success, wasn't it? I mean, congratulations to you and your team for what you achieved. That allows me to come to, from Nigeria to the next big economy in Africa, Egypt. And let me come to Rania, because it is no secret that just like Nigeria and many other countries in the continent, Egypt had its share of challenges over the last year, right? It had to battle with high inflation. It had to battle with foreign currency challenges. It also had to battle with many other geopolitical issues that the economy had to confront. So, Rania, given the hat you wear out of the Central Bank of Egypt, I know the Central Bank of Egypt played a huge role in managing what was a very complex situation. Can you tell the audience a little bit about the interventions that the central bank did to handle Egypt's challenges last year?
Of course. Thank you, Mr. Gupta. I just wanted to highlight basically what you had been saying earlier about how the world has been stricken by so many challenges and external shocks. We had the pandemic, the COVID-19 pandemic, out of which the symposium grew, which hit the world with an event the likes of which had not been seen in over 100 years. And then just as the world was starting to recover, the world got hit again by a Russo-Ukraine war, the far-reaching effect of which could not have truly been predicted by anyone, by any economic experts. And this left the world quite reeling from just high inflation, like you said, and central banks racing to start to unfold and bring back in years of monetary expansion. But Egypt's story did not start at the COVID-19 pandemic. Egypt's story has been an ongoing one for a long time, starting with the political revolution that happened in 2011, which led to another political tremors that unfolded in 2013. And then following that, this paved the way for the very large macroeconomic reform program that unfolded in 2016, in which the FX regime was liberalized for the first time ever. And this was quite a revolutionary move. And it paved the way for the growth that was to come. Because had it not been for this macroeconomic huge stabilization program that was backed by the IMF and had the full buy-in of the entire government of Egypt and the highest authorities, we would not have been able to weather the COVID pandemic or the Russia-Ukraine war the way that we did. That's a little bit of a backtrack, but let me move forward a little. So last March, the Egyptian market saw an outflow to the tune of approximately 20 billion USD, just capital flows, portfolio investors choosing to exit the market. Now, because we've been here for a long time and we know how these things work, and we know that this was really exceptional circumstances, we knew that we had to step in order to allow these portfolio investors swift and uninterrupted exit from the market. And that's what we did. And we drew down from our reserves, and we did this and we announced it, and it was done in a transparent manner. But we knew that we also needed to turn around and shore up our reserves, and we were capable on drawing, on moving to our allies who helped buffer our reserves and replenish our reserves. And we also started moving on the IMF program in order to reach an agreement that would help us secure another EFF program that would really ensure prolonged and continued macroeconomic stability. Now, this program was never meant to be a large one in size because, as you know, due to the packages that Egypt had to the IMF, there's a large amount of exposure that the IMF and Egypt have to each other. So we announced this very clearly that we would have a small program, but what we did in order to put that stamp of approval and to show the investor community at large Egypt's commitment to ongoing reform and change. And that's where we're going. And right now, the Central Bank of Egypt has 5 pillars in mind. Number one, it is to rebuild reserves, and this is a main pivot of the IMF program from organic sources such as asset sales and more diversified issuances, etc. And we want to continue to maintain our price stability mandate of making sure that inflation remains manageable on the medium term. And by doing this brings me to my third point of the CBE is very keen to improve the transmission mechanism, as well as the EGP, as well as the CBE continuing to ensure that the FX rate always serves as a shock absorber, not a shock amplifier. And the final thing is, at the heart of it all, ensuring the financial stability of the banking sector, because the banking sector is the backbone of the entire economy. So those are the 5 things that we are targeting right now in order to make sure that Egypt manages the current external shock that is affecting the entire world.
Thank you, Rania. For the audience's sake, I just want to put Rania's comment in some perspective, because when Mr. Obitan spoke, he talked about innovation, he talked about seizing the opportunity, he talked about collaboration. What Rania highlighted from a central bank's perspective of one of the largest economies on the continent is how swiftly the central bank acted, how transparently they acted, and how committed they were to policy-led reforms, which they saw through at a grassroots level. And I think that is a lesson for the continent, or for any central bank for that matter, that when crisis hits, the decisiveness matters. And so the Central Bank of Egypt showed that so in such an exemplary way. So Rania, thanks for explaining that. That allows me to bring in Banji Fenitola. Rania, you mentioned that we had a crisis that has not happened in the last century, or over a last century, so to speak. And it's a crisis of all kinds that we have been facing. The reason I'm highlighting what you said is I also consider Banji, who happens to be working with me in AFC, the treasurer of the century, right? Because if there is one man who seems to thrive when complexity hits us, it's this man. So Banji, tell the audience a little bit about the role that you think DFIs can play, should play, and has played in managing what has been, as Rania said, the crisis of the century. Over to you, the treasurer of the century.
Well, thank you, Sanjeev. I've never been called the treasurer of the century, so thank you for giving me a new name. It's nice to see Mr. Piton and Rania from Egypt. And I was just listening keenly to all the conversation, and obviously that fits into what Sanjeev just said about my role at AFC as the treasurer, as well as the head of financial institutions. Maybe if I start with the treasury part, I think we've all talked about how financial markets have been very difficult in the last few months. And I was somewhere a few weeks ago and I said, what a difference 12 months can make. I mean, it looks like it's a long time of adjustment, but believe it or not, it's just 12 months. 12 months ago, interest rates were near zero, and today we're virtually 5%. The Fed has hiked rates, I believe, 9 times since March last year. So it's unprecedented. It's a treasurer's nightmare. It's one of those things that you don't ever wish to see. But I also do say to people that, financial markets tend to have a short memory, unfortunately, because if you just do a trend and you look at rates from 1970, 71 till date, the average Fed funds rate has been about 5.4%. So we're really just going back to a long-term average. We're not anywhere at a point where the world has never seen before. In fact, the world has seen higher rates than this, but it's just that we keep forgetting. So I was saying a few weeks ago, and I'll say it again, that as a treasurer, back to Sanjeev's point, I've gone through in the last 12 months my circle of grief. I started with denial. I was like, oh, this is not true. It's not going to happen. Then I moved on to anger. Then I obviously skipped bargaining. I couldn't bargain with the Fed. The Fed was going to do what it wanted to do. then I've moved to depression, and finally I'm at acceptance stage. And I say this because that means the world has changed. The reality is that the world has changed. We may be in a period of a high interest rate forever. So clearly, DFIs like AFC have a big role to play in helping, Africa to mobilize the kind of capital that it needs for its own development. And that, leads me to Sanjeev's question: what kind of role can we play? And I think Mr. Piton's earlier comment, I found that very complimentary as to what AFC can do. I mean, we've worked with BOI for a long period now, right from when BOI was tapping the loan market on its own. We supported BOI, I believe, in January last year to go into the Eurobond market for the first time. And two roles, because most DFIs wouldn't do that. So I think that what DFIs are doing is beginning to change, helping borrowers to tap the international capital market. That was unique. We did that for BOI. But beyond that, it's actually even putting our balance sheet at work for a good client like BOI by providing an anchor order to ensure that the issuance was successful. I know Mr. Peter didn't talk about that transaction, but that transaction itself also won a couple of awards in terms of how well BOI was able to tap the market using DFIs like ours. And then obviously the support you provided with the credit enhancement also did help significantly. And I think that's the kind of thing that we should be doing as DFIs. On the central bank side, we also do have a very strong relationship. I heard when Rania was talking about shoring up reserve. We have a good relationship with the CBE. We have a relationship with other central banks across the continent, whereby we try to provide the liquidity. I took note of 20 billion FPI that left, so people like ourselves have to fill that gap in order to ensure that we don't have a currency crisis or we don't have any kind of big liquidity issue in any of the key African markets. So we have a big role to play, Sanjeev. I think we and similar institutions really need to step up. The rest of the world had QE. They had central banks pumping money in. Africa, unfortunately, doesn't have that. So DFIs like AFC definitely need to play that kind of role in mobilizing global capital to help all the borrowers and sovereigns on the continent.
Banji, thank you. I think, I hope the audience heard you clearly, because there was a very loud message in what you said. And that is that the DFIs have a very pivotal role in times like these, especially when markets are not open to you, not just to provide funding, but to be able to convene and create the collaboration that is required between the various role players on the continent. Because if solutions have to be found, if innovation has to be created, then collaboration is got to be the foundation. And I think I want the audience to appreciate what you said, that it's all about how DFIs think, but also take along the various role players with them to find solutions. Let me come to you, Mr. Pitan, because, there is a saying, they say that charity sort of begins at home, and God only helps those who help themselves. And one of the biggest dilemmas and contradictions that we have on the continent, as you know, is that it is not true that we don't have domestic savings. It is not true that we don't have money that can be converted into domestic capital. So the question I have for you, Mr. Pitan, is Nigeria has this very large pension fund industry, ever growing. The continent as a whole has got a very large pension industry. How do you see yourself and ourselves and other role players working together to make those pension funds work for the longer term development of the continent and provide capital that we otherwise lack? Let me hear your views on it.
Thank you very much, Sanjeev. You're right. When they say there is no capital in Africa, that is not true, because there are pockets of funds that are available if we tap into them. You mentioned one, the pension fund. In Nigeria, now maybe the pension fund now has close to about 13 trillion naira of money available. Where is this money? most of that money has been invested in government bonds and securities. These could have been funds that could have been used for infrastructure financing, long term, but there are very few products available in the market that could actually tap into the funds. So even the operators in the market have to be creative and come up with instruments that the pension funds can invest in. The pension fund managers also must be very creative. At BOI, we've had meetings with some of these pension managers. They look at the high rates of government bonds. At the time now, you're talking about 13, 14%. And they are looking at that kind of return in the short term. But can they also partner with people that want to finance infrastructure, maybe on PPP basis, reduce the interest rate because we're talking long term, and look at taking some equity, So there could be different ways of tapping into that. The pension fund industry is more developed in South Africa, and they have tons of money, possibly the largest in the continent. Most of those funds also, some of the funds are overseas. When you talk of banks like AFC, banks like African Export-Import Bank, you are focused on Africa. You ask yourself, the African governments, where are the foreign reserves of African countries being kept? Where are those deposits being held? If you are talking of capital for Africa, and you're looking at banks that are helping Africa, then consciously, African governments should also put some of their deposits in banks like yourself, like AFC, like African Export-Import Bank. Make them bigger and larger. For instance, now we are talking of power. A lot of money is needed in Africa for power, for all this climate change thing that we want to do. Where will the funds come from? And then we have a lot of oil and gas in Africa. But now, even the gas, I was talking to a few financiers in Europe. They're saying, well, gas is an intermediary kind of fuel. They might not finance it. So Africa is sitting on a large volume of gas. Who is going to do it? Banks like yourselves have to do it. So our pension funds have to be more active. Our African governments must put some of those resources in banks like yourselves. If we do all of these things, you'll be surprised how much money we can raise in Africa.
Mr. Pitan, thank you so much. I cannot agree with you enough as to what you said just now. You will be pleased to know, however, that increasingly a lot of pension funds on the continent see the merit in what you just now described. The AFC alone, actually, over the last 18 months, has managed to attract 4 of the largest pension funds on the continent to come in and invest in AFC because they see the merit of what you exactly said. And we are obviously going to encourage more and more pension funds to come in and invest with us and alongside us. But you also made a very, very important comment, and that is about the reserves. I was actually going to come to Rania with this question anyway. So thanks for laying the foundation for it. I appreciate that. So Rania, here you are, a central banker, having had to weather so many storms, which is what central bankers do. They weather storms. But one of the questions we've been asking ourselves is exactly what Mr. Pitan said, and that is that, Mr. Pitan said, and that is that you have this huge amount of reserves, which we usually, based on conventional wisdom, park outside the continent with investment grade institutions. But there are investment grade institutions on the continent. AFC is just one of them. There are many more. What would be your thinking about a systematic way, a structured way of those reserves starting to be banked within the continent so that then it can create the liquidity that we need on the continent? Sorry to put you in a spot, Rania. Maybe it's a controversial question, but I'll hear you answer anyway.
No, absolutely not. Thank you for this question. It's always important. And thank you, Mr. Pitan, for raising this issue. So for us, we are always doing business with the institutions here at Africa, and we have very long-stated relationships with all of the central banks, and we're always keen in order to continue manifesting those relationships. For us, how we determine where we place things is very strictly within the constraints of our guidelines of things being investment grade, etc. But if there are papers or such that are issued by things that abide by our investment guidelines, then there would be no issue whatsoever looking into them. But the process of also constructing investment guidelines that allow for this is something that we as African nations should actually come together and see to create a synergy on how to create those investment guidelines that would allow us to invest our shared reserves within the continent in a safe, liquid, and return-friendly manner. Because at the end of the day, as a central banker, you are in the business of managing crises. You are never out of a crisis. It's one onto the next, onto the next, onto the next. You live in a state of continuous stress testing, correct? So these, no matter what you do, your reserves have to always be liquid. They have to be placed in investment grade. But in order to be able to adequately tap into what our continent has to offer, perhaps there should be a working group to look into how best construct investment guidelines that would allow for and in fact encourage more participation amongst ourselves here within the continent.
Thank you, Rania. So, I'm encouraged by what you said, that there is clearly an openness to discuss this issue, and there is clearly a method through which we will be finding ways to make it happen. So thank you for that. But then allow me to come to you, Banji, because, in many ways, we've talked about innovation, we've talked about the need to mobilize funding within the continent. But at the end of the day, the continent as a whole, still needs to attract capital from outside. We can't run away from it. So given the way you look at things, and of course, the current volatility notwithstanding, can you tell the audience a little more about where you see those pockets of capital that could be brought into the continent, and under sort of what garb could they be brought in? And how do you, when you go out, raise money, and what is the proposition you place in front of investors outside? Over to you, Anji.
Well, thank you, Sanjeev. And I love the comment from Mr. Piton about central banks and the response from Rania. It's something I've been championing for years. And I also like the idea of a working group. So to the extent that is being created, Rania, I lift my hand as a volunteer to champion that for the continent. In terms of what people should be doing, I think it's a tough time for the continent. Let's be honest. You just need to look at where yields are, and how tough it is for virtually anyone to want to tap the market at this point in time at the double-digit interest rate. So one is the issue of cost of fund. The second issue, obviously, is the issue around market access. So two issues that we need to deal with. But to do that, I actually think that we as a continent need to position ourselves for, what I think at some point will be a market correction. And to have that positioning, a lot of investor engagement needs to happen. We should not wait until the market turns around before we start engaging investors. AFC historically issued a bond per year. Some years we did two. We didn't do one last year because we didn't like the market. But despite that, I spent a large part of last year and even the beginning of this year, going around meeting investors and just engaging and getting people, to be aware of our story, our credit, etc. And I think many issuers should do that. We should not wait. We still need to be out there talking to global investors, letting them realize that a lot of the problems that people see is somewhat exaggerated sometimes. We also need to have a lot of engagement with the rating agencies, because I think the rating agencies also need to better understand the continent and how risk is managed on the continent, rather than sometimes, one size fits all approach sometimes to how the assessment is done. So there's a lot of conversation that needs to happen with the rating agencies and all that. So for me, if I were a Minister of Finance or someone in that position for a sovereign, I think this is the time to be engaging. Let's not sit on the sideline entirely. We obviously need to be out there more and letting people understand the story and the opportunities on the continent.
Yeah, I mean, Manji, I think in many ways, it reminds me of the saying that bad news sells, right? And unfortunately, the continent, for reasons that really should be filtered further, continues to suffer from a very bad perception problem. And that manifests itself into how, therefore, pricing and interest on the continent is seen. So it is up to us collectively to manage that. What comes out of Africa is not uniformly negative, because it isn't. But somehow bad news gets reported more than good news. And that's where we have a lot of work to do to try and market Africa better. But let me come to, I'm mindful of the time. We got probably another 3 or 4 minutes left. So let me do a roundup. So Mr. Pitan, just a quick question to you. Any thoughts on any niche type of issuances, like sustainability linked, green, environment, climate friendly type of issuances or fundraising that you're thinking of? Because there is so much capital out there looking for those themes.
Yes, I agree with you. That's the area to go. And I think for most African, maybe SOEs, they should look into tapping into those areas. The countries where you have sovereign wealth, they could also be a source of funding. But I think generally, if you were to ask me one advice for SOEs in Africa, it's that, look, run your shop well. Run a transparent shop, run a professional shop. And if you are open and you have good corporate governance, I think there are also a lot of banks out there in a lot of different countries who are actually wanting to help Africa with funds that are long-term, well priced, but they don't want the funds to go into the wrong places and the wrong institutions. There are also friends of Africa out there. So apart from the climate funds, the green bonds you're talking about, there are also bilateral deals that you can do, with other countries. But like I said, it's important that they see the use of funds, the use of proceeds. If they are convinced, there are funds out there.
Thank you.
There are funds out there.
Thank you. So I think the audience appreciates that there is pools of capital there. We need to meet their criteria. Move to Rania quickly. Rania, similar theme, similar kind of question, but slightly different emphasis. And that is, as a central bank, obviously, you had to manage many things and you have to go through the reform process, et cetera, et cetera. But what has been the conversations like with other bilateral G2G lending programs, especially those ones that are not necessarily linked to the Bretton Woods institutions? How has that been in terms of attracting funding into the continent?
So in terms of attracting funding, I'm going to capitalize on the points that were actually made. Of course, it's become a more difficult environment globally for me to just approach any partner or any member and say, hello, I need to borrow some money or I need to lend some money. The world now is different. There's over-collateralization. There is very sharp haircuts. I mean, when you have the Fed pricing where it is now for risk-free rates, imagine where our risk premium would place any of our issuances. So any conversations immediately become more difficult conversations. But what really helps steer the conversation more powerfully than anything is actually labeling a cause for approaching a partner, things more noble that the entire world is looking at, such as climate finance, green hydrogen, empowering SMEs, When you have a powerful reason for having funds or attempting to secure funds, the conversation in itself becomes a different one, apart from just the process of trying to put rates down, etc. But when you're looking at, as you know, Egypt just posted the COP27. The amount of capital and memorandums of understanding that were signed are really quite baffling in size. There is so much appetite to do things, but people now want to move beyond just let's lend money, let's find return. If you have a powerful cause to work towards, that's when the conversation changes and shifts.
Thank you. So, Rania, that's great to know that the conversation has to be focused, the story has to be compelling, and there has to obviously got to be that process where people believe in what we are trying to do. I see that you didn't answer the question I asked about sort of G2G funding sources from non-conventional sources, particularly out of the IMF World Bank regime. But I'll touch on that offline with you. But Banji, coming to you for the sort of final words, so to speak, tell the audience why they should feel hope, why they should see this as the beginning of a very important era for the continent from a fundraising point of view.
Well, obviously, so many reasons. So Africa itself being the most important reason, the importance of Africa to the world entirely. I don't think the continent is a continent that can be ignored right now, especially in an era of very turbulent geopolitical environment. You know, Africa is almost like everybody's bride right now. Everybody wants to be here. Africa obviously holds the key to, you know, the energy transition, climate change. You know, Africa is, when the rest of the world is becoming more polarized, Africa is talking about a continental free trade area that would create, you know, perhaps the world's biggest market. So everyone wants to do business with Africa. And I think that is something, it's an opportunity that we all have to seize. And I think the way the markets are now certainly won't be like this forever. You know, markets go in cycles, so there will still be time when markets are open. But for now, obviously, like I said, I think we're in an era where rates may be high for some time. We would adjust as a continent. Economies will adjust. People will still come to the market at this rate. Countries obviously would involve more private sector participation, expand the revenue base to be able to absorb, hopefully, the higher interest costs. And ultimately, you know, the continent will continue to produce very high growth. And once that is happening, then I suspect that we will see a situation whereby there will be a lot of capital inflows into the continent. I see that everywhere I go. People are still very interested in investing in the continent. And that's something that we should hold on to and ensure that we mine as a continent.
Thank you, Banji. So essentially what we are telling the audience is that this is not a season for despair. It is a season of light, right? It is a season for us to believe that Africa holds a lot of solutions to the world's problems, be it food, be it energy, be it battery minerals, be it new markets, be it the need for the West to diversify their manufacturing base. All of that adds up to a huge set of opportunities. And it's for us to tell the story, because funding then will come, and will come more than we probably want. And I live to see that day. Thank you very much, Mark, for bearing with me and allowing me to exceed the time by 2 minutes. Thank you to my fellow panelists for being such great sports and answering all the questions that I asked. Over to you, Mark.
Thank you, Sanjeev. Excellent moderation as usual. I was reading some of the messages that were coming in. That was a very fascinating conversation. I wish we had more time. Let's do it again soon. Thank you very much to the panelists. Now, AFC is more than just a financier. It strives to be a 360-degree solutions provider that takes a very agile approach to developing projects, as you heard in that last session, projects that unlock potential across key sectors. And there's so much more that we need and should do together. So what is innovative about AFC's approach to investment in member countries? Who better to ask than AFC's Chief Investment Officer, Sameh Shenouda. Sameh.
Thank you so much, Mark. It's a pleasure to be here, and I would like to walk you through the way we think, the way we strategize, the way we implement our strategies, and how can we become a solution provider and not only an investor like many others. I have a few slides that I'd like to put on the screen. If the organizers can put these slides on the screen, please. So while we wait for the presentation to be put on the screen, as I said, we see ourselves as a solution provider. We are not a plain vanilla investor. Africa has many complex issues, has many needs in infrastructure, and the bankable projects that we see are not as many as you would expect. The secret is that you need to find solutions, you need to be innovative, and you need to be creative. Just a quick background for those of you who don't know every area we work in. We work in 5 broad sectors. Natural resources, and this covers oil, gas, transition metals, and battery metals. Power, and this covers gas, gas to power on the generation side, renewables, and transmission. And we focus on heavy industries and telecoms and technology. And with heavy industries, we focus on how we use the endowment that we have in terms of raw materials, in terms of agricultural products, in adding value and not exporting the raw material itself. Also transport, logistics, and this covers ports, rail, transport generally, food storage, supply chain, and obviously following the pandemic and the war, the food theme, food security theme has become a very high priority for us. Then we have another area that has been growing very fast, which is what we call product solutions, and this covers sovereign lending, corporate lending, trade finance, and other balance sheet projects. The way we usually originate projects is through project development. So we do take early stage risk, we do take early stage development risk, and look for projects that are in a conceptual phase first, and then move into developing, spending early stage risk capital to develop the project, bring them to a bankable project, get to a point where we get to a project financial close, construction, and then operations. Across the board, we prioritize sustainability, development impact, and resilience of our projects. If we can go to the next slide, please. Next one. So when we look at solutions to provide to countries, to businesses, to sectors, we follow a number of themes. So the priority themes for us are climate and energy, and we group a number of subsectors below that, and I will discuss very quickly each of those. Whether it's renewable energy, battery metals, or gas to power. Integrated supply chains, we always solve for a full ecosystem. So from the source of the raw material to the transport and logistics, to the industrial zones, and then to the ports at the end, including storage and others. And then, as I mentioned, beneficiation and industrialization. How do we add value? How do we convert the metals, precious metals, and others, other minerals into a final product or a semi-final product. Same with oil, for example. We are now investors in 8 refineries in Africa, and this would reduce the reliance of African countries to import refined products, even though they have the crude. So we keep that within the country. We refine the products and then distribute it locally. Other industries include cement, fertilizers, and others. And then the last theme is a new one around telecoms and technology. Next slide, please. So one of the things I wanted to focus on, because we can spend a long time discussing what we do and how we do it, we invest in a number of instruments. It could be debt, it could be equity, and anything in between. We can invest in single projects, and we can invest in platforms. And I would like to focus the next few minutes on our platform strategy, where we feel that it is important to group a number of projects within the same sector under one holding company, and we call it a platform, where you have the same management team, the same banking relationships, the same pipeline of projects, and these platforms would attract third-party capital, would ensure that we have enough scale, enough diversification within the geographies. We create more value. We have more influence with our EPC contractors to negotiate better terms. We have more influence with our lenders as well. And it demonstrates to governments and to other partners that we have done many projects before and we can do more in their country or in their sector. So there are a lot of benefits to grouping a number of projects within the same sectors under a platform. I'd like to walk you quickly through 4 examples of platforms that we are involved in, and they will always follow the themes that I have discussed. If we can move to the next slide, please. So the first platform that I wanted to share with you is related to climate. It's a renewables energy platform. If you can move to the next slide, please. So about 2.5 years ago, we presented to our board a strategy to develop the largest renewable energy platform. We started from a small base, and we decided that we want to go to we decided that we want to become the largest renewables player in Africa. And the strategy was to implement this was through a number of routes, through partnerships with like-minded players, through acquisitions of existing assets, and through developing greenfield projects from scratch. Following the approval of the strategy, we started with 130 megawatts of renewable assets in 3 countries. We have created partnerships and made one large acquisition that has now put us in the leading position and become the largest renewables player in Africa. We have 13 assets: solar, wind, and hydro. Almost all of them are operational, and we have a very strong pipeline of projects of about 13.7 gigawatts. Now, our target is to become a 5 gigawatt platform in the next 3 to 5 years. This, as you see from the map on the screen, has allowed us to diversify geographically, diversify in terms of technology, but also have the right partners to be able to implement the strategy and execute on our very ambitious plan. The key thing here is scalability, is access to clean power in different countries, and attracting third-party capital to come and support us and partner with us in executing our plan. We are now getting a lot of inbound interest to participate with us because of the scale that we have created and because of the diversification and the fact that we have a strong mix of operating and under development projects. If we can go to the next platform, please. So the next one is one that is very interesting. It's around battery minerals or critical minerals. Next slide, please. Just for everyone to have a bit of a background, Africa is endowed with 40% of all the minerals that are required to build an electric vehicle or a battery for a power plant. However, all these minerals are exported in raw form to China. China builds the battery cells, builds the electric vehicles, and then exports them to Europe and the US and other parts of the world. So there is a huge imbalance where Africa has 40% of the materials, but China produces 70 to 80% of the final product. So as a solution provider, what AFC is trying to do is to capture, at least for now, a few steps in the production of the electric vehicle, at least a few steps in building the battery, so that instead of having only 4 or 5% of the value of an electric vehicle in Africa, which is the mining part of it, capturing up to 40 or 50% of that value. If we can go to the next slide, please. So for you to build an electric vehicle, for example, you need to go through 6 or 7 steps. Can you go to the next slide, please? So you start with mining. You go through refining, precursor production, cell assembly, and then the electric vehicles. The red dotted line or the box on the left is what is happening today in Africa, which is only the mining part, which represents a market size of $11 billion. The electric vehicle market at the bottom right of the slide shows a $7 trillion dollar market size. What we're trying to do at AFC is to continue doing the mining, but also capture steps 2, 3, and 6. Where you add significant value, you create jobs, and you reduce significant emissions of exporting the raw product to China and then back to US and Africa. It's not an easy job. It is very complicated, but we see the value and we're determined to make it happen in the next 12 to 18 months. Next slide, please. Next one, please. I'll skip this one. Next slide, please. The third example I want to give is integrated supply chains. We are majority owners of a platform called Arise Integrated Industrial Platform. This is one of the oldest platforms that we have created and built, and it's a great success story where, as I said, we solve for the whole ecosystem. We start from the raw material or the mineral. We invest in the transport of that raw material to an industrial zone. So we invest in rail or in roads or in other forms of transport. We have invested in industrial zones, and we have 3 operating industrial zones that add significant value to that raw material. We've attracted so many industrial players who come and build their factories around that anchor raw material or mineral. And then we invested in a number of ports where we can use the product that has been manufactured and value added to it, and take it to international markets through our ports and export it. So just this slide gives you a bit of an example of how much Africa has in terms of global production of the raw products, and this is where the maps are. So 55% of all the cashews in the world are produced in Africa, 70% for cocoa, etc. But then less than 10, 20, 30% maximum is actually, there's any value added to it on the continent. So through this platform, Arise IIP, we are trying to increase that percentage at the bottom where we capture value. As I said, we create jobs and we produce final or semi-final products for local use or for exports. The solution is not only an industrial zone. The solution is not only a port. The solution is not only a mine or an agricultural investment. It's the full ecosystem. You have to solve for the full corridor. Otherwise, you will not be able to deliver on the strategy. And we have very consciously done that over the last 7 years. And if we can go to the next slide, it's been a fantastic success story in 3 of our operating assets in Gabon, Togo, and Benin. We are now developing 4 more, and we have demonstrated the success not only through the production, but also through attracting third-party capital and attracting the best management you can have in developing such supply chain, integrated supply chains. The last example I want to give is linked to that, is another platform that we are partners in. If we can go to the last slide, please. It is a port platform. As I said, we solve for the full supply chain. We have a ports and logistics platform that we are partnering with. Next slide, please. We are partnering with 2 of our partners. One is the management team, and 2 is AP Moller. We currently have 5 ports. 4 of them are operational, and 1 of them is a few months from being operational. And we have a very strong pipeline of projects. And this is also grouped under a ports platform that would then create that scale and size. So I just wanted to walk you through, as I said, how we think, how we strategize, and how we implement our strategy. We're not a typical bank. We do provide solutions, and we look for where the problem is, and look for pragmatic solutions, bring the best people and the best partners, and create scale and size that would then attract others to join us. Thank you very much.
Thank you very much, Sameh. Now, it's been a whirlwind of wins for AFC over the past few weeks. As you heard, AFC closed the Lekela transactions, making it a major force in the renewable space across the continent. AFC was recognized as DFI of the Year at the influential IJ Global Awards in London. And then to top it all off, we saw a record commitment by the Green Climate Fund towards the Infrastructure Climate Resilience Fund that's led by the AFC subsidiary AFC Capital Partners. Now, to tell us more, we're joined by the Chief Executive Officer of AFC Capital Partners, Ayan Adam.
Thank you very much, Mark. And all protocols stand. All His Excellencies, our board, and all the partners that are on this call. So I think we can put on the slide, but AFC Capital Partners is a fully owned subsidiary of AFC. And this is really part of the strategy that was laid out in 2018, where we wanted to find solutions, African solutions to African problems, that we could look at what are the solutions that are needed that will support in further mobilization of capital, but most importantly, along sustainable investment themes. And this, as a result of this, we have now a fund called the Infrastructure Climate Resilient Fund. We can move forward on this. And the Infrastructure Climate Resilient Fund, and I am joined by our first investor, which is a very important investor, which is the Green Climate Fund, Mr. Soji Omnishore, who is the Deputy Director of the private sector arm of the Green Climate Fund, where we have secured the first financing of $253.8 million. So what is the Infrastructure Climate Resilience Fund? As I said, this is the first product of the subsidiary AFC Capital Partners. And again, in line with really developing African solutions to Africa's problems, we wanted to have a first take in really changing the way infrastructure is developed, planned, constructed, and operated against the forces of climate. Climate change is affecting, despite Africa being such a low emitter, climate change is affecting us, and it's affecting us in a disproportionate way. So the objective of this fund is to really enhance the quality and the longevity of physical infrastructure. And when we talk about physical infrastructure, we're talking about three or four of the core sectors that AFC is involved in. The first being the climate resilient transport infrastructure, our roads, our airports, our bridges, and also the industrial parks that are really connected. As my colleague Same has explained, we are really looking at ecosystem-based. Today, the forces of climate we're seeing significant flooding, we're seeing huge droughts, we're seeing winds, we're seeing hurricanes in the east and the southern coast of Africa. We've seen floods in Nigeria, in other places. So we cannot look at infrastructure in the way we did. So ICRF is a product which will mobilize between $750 to $1 billion of equity capital, and it will co-invest alongside the AFC balance sheet in these sectors. What is the objective? Is that we will be the first to change the paradigm in creating a resilient infrastructure asset class. And the resilient, what do we mean by that? Is that what we mean is that we will look at our infrastructure, both the greenfield, since 2/3 of our infrastructure have to be built. This is an opportunity to build them better and to build them strong. And because of this element of climate, we are very happy to have partnered with the largest concessional investor, that's the Green Climate Fund. So it's a blended fund model where 33% of the capital is subordinated to support further mobilization of capital. Next. So the whole objective of the Infrastructure Climate Resilient Fund, as we said, is to really build infrastructure that is resilient to the impacts of climate change. And that means we will have to look at, plan, we identified what are these climate risks, we plan, we design, we've developed proprietary modeling that look connecting the climate scenarios from the IPCC, the independent panel on climate change, and we integrate that into to our offering. And with the idea that going forward, AFC infrastructure that are built by AFC will withstand and will come on stream very quickly as a result of the solutions that we are offering through the Infrastructure Climate Resilient Fund. Next. As we said, it's a blended finance model. So our target is to really work with African institutional investors and de-risk that capital into infrastructure. And the way it works is that 1/3 of the capital is going to be paid last after we pay institutional capital, 10% US dollar return. And then we pay 3% to the anchor investor. And then there's a revenue share. This really is an attractive proposition. There was a talk about, we have a lot of capital in Africa today. There is a huge pension industry here in Nigeria, South Africa, Southern Africa, and many pockets in Africa. This product gives them a de-risked product to support the further attraction of capital in a blended fashion, but also gives them a dollar return that they could be comfortable with. That is as a result of this product, the Infrastructure Climate Resilient Fund, promoted both by AFC and AFC Capital. Next. So I think for some of you who are not familiar with the AFC, and I know we have a lot of our countries on this forum, so far we have received, the program is targeting those 20 countries at the top, which have given us non-objection letters to the GCF, but we're still seeking 5 more of very large countries, that is Egypt, Senegal, South Africa, Tanzania, and Ethiopia, which has just become a member. And we hope that then we can submit those and then add that into our planning. Because in the last slides that my colleague Same put through, I know that we have plans to look at port sectors in Southern Africa, Egypt, and others. So that becomes very important pipeline going forward. So I think I'm going to end my talk. It was only brief to tell you that we are here. We are an important part of the AFC. We will be bundling many different products going forward. But this first one, the Infrastructure Climate Resilient Fund, is important. It's a game changer for Africa. It's a game changer for AFC to build resilient infrastructure to the impacts of climate. So at this point, I think we would like to invite our partner. We have Mr. Soji Omishori online, and he can discuss a little bit about what went into the thinking of this large investor, where we have received just in the March board, 240 million in equity and around 13.8 million in capacity building and technical assistance, both to governments, but also to ensure that our projects have the right solutions and that we are not building the way we did before. Thank you.
As I said, my name is Soji Omishori, and I'm the Deputy Director for the Private Sector Facility within Green GCF, Green Climate Fund. For those of you who do not know about the GCF, basically we're a climate fund. We have about $40 billion under management. We're funded by the Global North for projects in Global South, where a lot of the kind of climate impact is currently taking place. We very much focus on mitigation and adaptation projects, and we provide concessional funding. When I say concessional funding, it could be debt, subordinated debt, equity, junior equity, grants, guarantees. And we also look at it doing a lot more in relation to insurance. But first and foremost, we are not financial returns focused. The focus of the fund is very much in terms of ensuring kind of a climate impact, as I said, in relation to both adaptation as well as mitigation. In relation to this particular opportunity, I think for us, we're very excited to partner with AFC and AFC Capital on this investment that seeks to address the infrastructure gap, especially climate resilient infrastructure that exists in Africa. And I think Ayan touched upon that. This strategic investment is important for us in order to support, AFC, one of the leading infrastructure developers and investors in the region. In terms of our mandate is fourfold. Firstly, to de-risk projects and address market failures, to catalyze private sector financing via use of concessional funding for blended finance structures. Thirdly, to engage with partners who are proven and can deliver in challenging jurisdictions. And lastly, to help deliver impact in terms of lives, livelihoods, and economic development. The investment in this particular case, as Jan said, was $240 million in the form of junior equity. And it was basically provided to enable GCF to provide catalytic funding for infrastructure projects in more than 20 countries. And as we hope through the provision of additional no objection letters, there'll be another 4 or 5 countries that will come on stream. But beyond that, we also provided the grant funding component, which also helps to address other constraints. And those 2 constraints, and we touched upon it during the course of this evening, development of bankable projects, which helps to improve deal pipeline. I think a lot of people misunderstand what bankable is. A lot of people think that they have an idea, they go to the bank helps them assess the bank, the bank assesses the bankability of, but unfortunately that is not the case. The banks don't make projects bankable, they assess the bankability of a project, and based on that assessment, provide risk capital behind it. But for us, the area is helping to develop bankable projects and help to increase the deal pipeline. That's number one. Secondly, one of the benefits of the grant component was the strengthening of infrastructure development, especially the whole ecosystem around insurance, around data, which will be required for the industry, as well as AFC capital, the fund, to be sustainable and to deliver impact, which is obviously the key focus for us. So in summary, we're excited to be partnering with AFC Capital, as well as the team that is knowledgeable and experienced, that we believe will be able to deliver on this innovative and transformative project. And we very much look forward to successful implementation of this investment program and the impacting of livelihoods across the region. Thank you.
Thank you so much, Soji. I think Mark will come back. We'll go back to you. But any questions, if we can put up the last slide on these projects from our countries, from some of the partners that are present, please reach out to us. We are happy to engage with you directly, to take you through the process and to support how we can together change the way we look, design, and also basically operate our infrastructure. The forces of climate are severe. We're seeing it on a daily basis. So the business as usual cannot work in the context of ensuring that Africa's infrastructure is climate proofed. If we do not climate proof, we are passing to our next generation debt and equity for infrastructure that will break down, that would have significant issue, that would have strong that would not withstand the forces of climate that we have outlined. I think we all know that the emission per capita in Africa is very low. However, the impacts is universal. We're seeing it in each and every countries and some of the smaller countries. So this is a very important program where AFC is again leading the way by solving Africa's problems with African solution. And we're very grateful to our partner, the Green Climate Fund, for this very strong support, but also the show of confidence that in Africa, we can change the paradigm as to how we can climate-proof our infrastructure. Thank you very much.
Thank you very much, and congratulations to AFC and the Green Climate Fund for this important partnership. We're very excited to see what transformative impact we can create together. Now, apologies for the blurriness of the slides there. Some people had difficulty seeing the slides. We had some slight technical problems, but we are recording the session and the slides, I'm told, will be shared with all attendees after the symposium. So look out for the email. Now, we're more or less out of time. We're definitely out of time. And I had quite a few notes that I was taking through this very, very stimulating session. Perhaps I can just read a few highlights that jumped out at me. President Hichilema of Zambia spoke about cooperation between African sovereigns and African multilaterals like AFC. And he described it as a formidable partnership, a formidable force that we can forge together, and spoke of his aims to collaborate and harness natural resources and add value to the resources God has given us. He described AFC as the ideal partner to rapidly increase the pace of industrialization, not just in Zambia, but across Africa. I was also taken with Dr. Tolina, the Ethiopia's State Minister of Finance intervention, where he described AFC membership as a great milestone for Ethiopia and that AFC is unique. Its track record is great, and that AFC has identified, I believe, $300 million in pipelines in various sectors. And he spoke about that word resilience that came up a lot. Mr. Piton, the MD of Bank of Industry in Nigeria, said African governments should put their funds into the likes of AFC. He talked about about understanding how swift AFC was when BOI was looking to raise funds, and that its A3 rating was an indispensable asset in supporting BOI to go to the market and very successfully raise $1 billion in financing. So there were lessons to be learned from that. Our own president and CEO, Samaila Zubaira, was very direct. He said we need to take decisions to add more value to our resources. We must capture and retain that value. Take minerals and metals for the energy transition, for example. He pointed out that electrical vehicles market was about $7 billion now, but it was going to balloon to something like trillion. I said billion, I mean trillion, 7 trillion. It was going to balloon to 46 trillion in the next few years, and Africa must have a significant part of that. We must make those decisions now, and it can no longer be business as usual. And also Ms. Rania El Sewi from the Central Bank of Egypt talked about liquidity issues and the importance of shoring up reserves. Banji also backed that up, and he mentioned how when the liquidity crisis impacted the world, that many of the more developing nations pumped liquidity into the system. We couldn't do that. And so Banji points out that it's now more important than ever, that AFC acts as a conduit to badly needed capital. I'll stop there because there was much more. All we have left is really for me to pass the microphone to Alice Usanese, who is the Vice President and Acting Head of Country Relations for AFC, to end this session, this whole forum, with the vote of thanks. Alice.
Many thanks, Mark. On behalf of the country relations team, it's my pleasure to really appreciate this moment and thank you all of you to joining the third edition of the Country and Stakeholder Symposium. My thanks to all of you for your active contribution and indeed in particular to their speakers and panelists for their insightful engagement. As mentioned by our chairman in the opening remarks, the symposium has been created really as a platform for AFC to engage constructively with its stakeholders, for our country members, shareholders, and peers to share experiences and learn from each other so we can deliver better for the continent. In His Excellency President of Zambia words, we must challenge ourselves to put our continent first through collaborative approach so the continent can emerge better from the current crisis and be able to even exceed the expectation of our future generation. Indeed, our current existing economic model, as has been discussed today, has failed many times, and as Africans, must all take responsibility to own our destiny through bold action. Bold action results in the creation of institutions like AFC, providing end-to-end solution with a hybrid structure fit to respond to the continent's unique and evolving challenges. Institutions whom their only mandate is to advance the economic development and the welfare of our people. By bringing along both regional and regional partners with real commitment and interest to have Africa as part of the solution. And it is with this core belief and drive that the corporation has grown so quickly and successfully over the last 16 years. We have invested more than 10 billion in productive sectors while delivering competitive returns to our shareholders. And as I think has come clear during this discussion, we will not have achieved all these milestones without the support of our country members, shareholders, men who are here today. Lomé, Lagos, Libreville, Cairo, Rwanda, Addis Ababa, Dubai, Riyadh, Shanghai, Mumbai, Paris, London, and many others. Thank you. Indeed, AFC is because you are. I wanted to close by reiterating the commitment of the corporation to continue delivering for the continent, diversifying its partners, and especially championing the South-South collaboration that we believe will unlock a new source of capital and innovation. I think this was well explained by Mr. Peter from Bank of Industry. I'll end by asking you and encouraging all of you from government agency, institutional investors, impact investors, sponsors, contractors, both from the continent and outside of the continent, to continue partnering with AFC by investing in the corporation capital structure, by co-investing with us, by becoming members, and most importantly, by changing and challenging the narrative of the continent. As demonstrated during today's symposium, AFC remains the leading developer, financier, and solution provider when it comes to local industrialization, climate change, and bridging the continent infrastructure deficit. We are the third best rated institution, with the two first being part of our shareholders. And as you heard from our Chief Investment Officer, the Chief CEO Officer of AFC Capital, in addition to being a long-term diverse investment platform, position infrastructure, Africa infrastructure as an attractive and risk asset class, AFC prides itself as a creator of opportunities to you, to our partners, on the back of a multi-country and multi-sector ecosystem investment strategy. And we look forward to cooperate with all of you. And if today's participation is the only sign, we are in a good path. I understand we have reached a high record of direct participation. So on that note, to my country relation team, AFC colleague, our service provider, thank you for working tirelessly over the past few weeks in making this event a success. I look forward, as well as anyone at AFC, to continue engaging with all of you, and I wish you a happy Easter holiday and Ramadan Kareem for the ones observing the fast. Thank you. Merci beaucoup. Shukran. Obrigados. Back to you, Mark.
Thank you, Alice. That concludes the third AFC Country and Stakeholder Symposium. I want to thank all our great speakers. It's been my pleasure to moderate such enlightening sessions. Thank you for your time, and we look forward to further collaborations as we boldly go forward together to create the Africa we want. Have a great rest of the day.